Picture this. The year is 1929. Stock markets are soaring. Millionaires are being made overnight. And newspapers declare that prosperity is here to stay. People borrow money just to invest more, convinced nothing can go wrong. Then, in a single week, it all collapses. The richest country in the world falls into despair. Fast forward to 2008. It's a different time, a different economy, but the same story. Banks believe housing prices can never fall. Wall Street creates new forms of debt so complex that even the experts can't explain them. Everyone is getting rich, until one morning, Lehman Brothers collapses and the entire financial world follows. Now look at China today. Endless construction, ghost cities, and trillions in hidden loans. History doesn't repeat word for word, but it rhymes perfectly. Every empire, every economy, every system, no matter how advanced, eventually faces a breaking point. But what if these collapses weren't random? What if every major economic disaster in history could be traced back to the same three fundamental rules? Rules that always appear before the fall, like storm clouds before a hurricane. Because when you study Rome, the Great Depression, Japan's lost decade, or Argentina's currency crisis, you'll see the same pattern emerge again and again. The illusion of endless growth, the rise of uncontrollable debt, and finally, the collapse of trust itself. Three simple forces that, when combined, can bring down even the strongest economies on Earth. From the Roman Empire to Wall Street, from Britain's pound to modern crypto markets, the pattern never changes. It only hides in plain sight until it's too late. These are the laws that predict every financial collapse in history, and they might be whispering warnings about our world right now. The only question is whether we'll recognize them in time. Financial collapses seem to strike without warning. To most people, they feel sudden, a shock, a disaster that no one could have seen coming. But the truth is, the warning signs are always there. They're buried in data, hidden in policy decisions, and disguised as economic growth. Economists argue about the details, interest rates, inflation, global trade, but history tells a simpler story. Every collapse follows the same script, and those who learn to read it can see the cracks forming long before the world admits they exist. Think about it. When the Roman Empire began debasing its currency, when the U.S. stock market went euphoric in the 1920s, when Japan's real estate values exploded in the 80s, or when Wall Street leveraged the future in 2008, they all believed they had found a new formula for wealth that could never end. Every time, that confidence became arrogance. Every time, debt became fuel for something unsustainable. And every time, trust, the foundation of every financial system, shattered overnight. In this video, we'll break down those three timeless rules. We'll explore how they emerge, how they spread like a virus through economies, and how they destroyed entire nations when ignored. But more importantly, we'll look at what they're telling us about the world right now, about rising global debt, endless money printing, and a system that might be standing on the same fragile foundation as all the others before it. Because history isn't just something that happens behind us. It's the map of where we're heading next. So as you watch, think of this not as a history lesson, but as a warning. These aren't just rules of economics. They're rules of human behavior. And every time we forget them, the cycle begins again. Rule number 1, the illusion of infinite growth. Every collapse begins with optimism, not the quiet, cautious optimism that builds progress, but the blind belief that growth can go on forever. Every major economic disaster in history starts during a moment of confidence, when people, governments, and corporations all begin to believe they've outsmarted the limits of reality. It's when wealth feels effortless, when risk feels like opportunity, and when the idea of a slowdown seems impossible. In ancient Rome, this illusion took the form of conquest. As long as the empire kept expanding, the money kept flowing. New lands meant new taxes, new slaves, and new resources. Rome built roads, cities, and monuments to its own greatness. But growth based on expansion has a hidden cost. When you run out of things to conquer, your economy stops growing, but your expenses remain. To hide the problem, Rome began minting more coins with less silver, effectively printing money to fund its lifestyle. Inflation followed, trade collapsed, and the empire started to crumble from within. The illusion of endless growth had turned poisonous. Fast forward to the 1920s. America had just emerged from World War I as a global powerhouse. New technologies, cars, radios, electricity, made life feel unstoppable. The stock market became the national obsession. Ordinary citizens borrowed money to buy stocks, convinced prices could only rise. Newspapers and politicians reinforced the illusion, declaring a new era of permanent prosperity. But prosperity built on speculation isn't wealth, it's a bubble. When reality finally caught up, the entire system imploded, triggering the Great Depression. Japan followed the same pattern in the 1980s. Cheap credit and overconfidence drove real estate and stock prices to insane levels. At one point, the land under the Imperial Palace in Tokyo was said to be worth more than all the real estate in California combined. The illusion was so strong that no one dared question it. But when the bubble burst, Japan entered a period of stagnation that lasted decades. The lost decade. The modern world isn't immune either. Today, global markets chase the same illusion through digital assets, speculative startups, and debt-fueled growth. Governments keep printing money to sustain spending. Corporations borrow to buy back their own stock, and consumers live on credit. The pattern is identical to history, only the technology has changed. The illusion of infinite growth blinds us to limits. It convinces nations to spend more, investors to risk more, and central banks to manipulate more, all to keep the illusion alive. But when growth becomes religion, reality becomes rebellion. Every collapse begins when people stop asking whether growth is sustainable and start assuming it's guaranteed. Because the truth is simple. No tree grows to the sky. Once that illusion takes over, the fall has already begun. Rule number 2, the debt spiral. If the illusion of infinite growth is the spark, the debt spiral is the fuel. Debt by itself isn't bad. It's what allows societies to build roads, start businesses, and buy homes. But when debt stops funding productivity and starts funding fantasy, it becomes a silent killer of economies. It's invisible at first, a slow accumulation that feels harmless. But debt grows faster than income, faster than productivity, and eventually faster than the ability to repay. That's when the spiral begins. Every major financial collapse is built on hidden leverage. In the years leading up to the 2008 financial crisis, Wall Street created complex derivatives and mortgage-backed securities that multiplied the impact of every dollar borrowed. Home buyers took out loans they couldn't afford because they believed prices would always rise. Banks borrowed against those loans, insurers backed them, and investors bought them. Everyone was making money, on paper. But when the housing market dipped, that invisible web of leverage snapped. Losses multiplied exponentially, freezing the entire financial system. The same thing happened in the 1920s, when Americans borrowed to buy stocks and companies borrowed to expand into non-existent markets. When growth slowed, the debt became unbearable. The debt spiral isn't just about numbers. It's about psychology. When debt is cheap, it feels smart to borrow more. Politicians use it to fund promises. Corporations use it to inflate stock prices, and citizens use it to chase lifestyles they can't afford. But as interest rates rise or incomes stagnate, repayment becomes impossible. To avoid collapse, more debt is created to pay off old debt. It's a snake eating its own tail. Look at modern China. Local governments have borrowed trillions to fund construction projects that no one needs. Empty apartments, ghost cities, and massive infrastructure projects, all fueled by credit. As the property market slows, debt payments are piling up faster than growth can handle. The spiral tightens. The danger of the debt spiral is that it creates a false sense of stability. Everything seems fine until suddenly it isn't. Because when a system depends on constant borrowing to survive, a single disruption, a bank failure, a policy change, a sudden loss of confidence, can trigger collapse overnight. Every empire, from ancient Rome to modern America, eventually reaches a point where debt outgrows its foundation. And once that happens, no amount of optimism or printing can stop the chain reaction. Rule number 3, the collapse of trust. When the illusion of growth is gone and the debt spiral reaches its limit, there's only one thing holding the system together: trust. Trust that your money has value. Trust that banks will honor deposits. Trust that governments will act in good faith. The moment that trust is broken, collapse becomes unstoppable. Money itself is nothing but trust, a piece of paper or a digital number backed by belief. When people lose that belief, the economy ceases to function. We saw this in Weimar Germany after World War I. The government printed money to pay its debts, and soon prices were doubling by the hour. People carried cash in wheelbarrows, not because the nation ran out of paper, but because it ran out of faith. The same story played out in Zimbabwe, Venezuela, and Argentina, where inflation turned money into confetti. Trust isn't just about currency. It's about institutions. In 2008, when Lehman Brothers fell, the crisis wasn't just about mortgages. It was about trust. Banks stopped lending to each other. Investors fled markets. Consumers stopped spending. In a matter of days, confidence in the entire global system vanished. The same thing happened during the Great Depression when bank runs spread across the U.S., not because banks lacked money, but because people believed they did. Once trust collapses, recovery takes years, sometimes generations. Japan's lost decade wasn't just about bad loans. It was about the loss of public faith in growth itself. People stopped investing, stopped spending, and the economy entered a psychological freeze. Today, trust is once again fragile. Central banks print trillions, governments promise endless bailouts, and citizens grow skeptical. Cryptocurrencies rose because people lost trust in traditional finance, and then collapsed because people lost trust in crypto itself. It's a global crisis of belief. In the end, every financial system is a story we tell ourselves, a story that only works as long as we all agree to believe in it. Once people stop believing that tomorrow will be better than today, they stop investing, stop borrowing, and stop participating. The system doesn't explode. It withers. And no empire, no economy, and no nation can survive once that trust disappears. Trust, once broken, is almost impossible to rebuild. And that's why every collapse ends the same way, not with numbers on a chart, but with a collective loss of faith. It's the final stage of every financial disaster, and the most dangerous of all, because it doesn't just destroy money. It destroys belief in the future itself. Every collapse in history, no matter how different in time or technology, follows the same tragic rhythm: the rise of illusion, the flood of debt, and the death of trust. These are not just economic forces. They are reflections of human behavior. Our ambition, our greed, and our fear repeat themselves like an echo through time. From the fall of Rome to the crash of 1929, from Japan's lost decade to the housing collapse of 2008, every boom begins with confidence, grows with credit, and ends when faith runs out. The same pattern has played out for thousands of years, only the faces and currencies have changed. When we look at history this way, it stops being random and starts looking like a warning system. The first rule, the illusion of infinite growth, teaches us that every empire collapses when it believes it's invincible. Growth is essential, but when it becomes an ideology, it blinds leaders to limits. The second rule, the debt spiral, shows us how prosperity can be borrowed, but not forever. Debt is a quiet engine that turns optimism into catastrophe. And the third rule, the collapse of trust, is the final, irreversible step. Once people stop believing in the system, the collapse becomes psychological as much as financial. Now look around the world today. Global debt is at record highs. Nations are printing money faster than at any time in history. Asset prices have soared far beyond what most people can afford. We are surrounded by illusions of endless growth, new technologies, speculative bubbles, booming markets. But underneath, the same pressure builds: massive borrowing, widening inequality, and eroding trust. It feels stable, just as it always does before the storm. Because collapse doesn't begin with chaos. It begins with calm, with the comforting belief that this time it's different. But it's never different. History doesn't repeat exactly, but it rhymes with perfect precision. The same logic that destroyed Rome, Spain, and the British Empire is still alive today, only hidden beneath modern finance and digital screens. And that's what makes the pattern so dangerous. It evolves with us. We no longer mint silver coins or trade tulips, but the psychology behind each collapse remains exactly the same. When ambition replaces prudence, when debt replaces productivity, and when manipulation replaces trust, the fall is inevitable. The lesson isn't to fear the collapse, but to recognize it before it arrives. Economies can recover, systems can rebuild, but only if people learn to see through the illusions that blind them. Understanding these three rules isn't about predicting the exact day the next crash will come. It's about recognizing the moment we start ignoring reality, because that's when history always strikes. So when you see markets soaring far beyond logic, when you hear politicians promise growth without limits, when you see debt rising faster than wealth, and when trust in money and institutions begins to fade, remember the pattern. These aren't random signs. They're warnings written into the DNA of civilization itself. Every empire thinks it's different. Every nation believes it's smarter than those that fell before. But the truth is timeless. No society can outrun its own greed. The illusion of infinite growth, the debt spiral, and the collapse of trust will always return. The only choice we have is whether to see the storm coming or to look away and pretend it isn't there. Because the next collapse isn't a question of if, it's a question of when. And when it comes, those who understood these three rules and remember the lessons of history won't be surprised. They'll be prepared.